Hey, hello, and welcome to the Lima Market Report for this week. Here's the recap and what to watch heading into mid-October. Markets showed mixed performance this week as investors weighted stronger than expected economic data against ongoing geopolitical uncertainty. The S&P 500 ended the week slightly higher, up around 0.4%, extending its recent gains and holding near all-time highs, despite a crazy and volatile Friday sell-off. The Nasdaq Composite advanced roughly 0.6%, supported by continued strength in large-cap technology stocks. Meanwhile, the bond market was relatively stable. The 10-year Treasury yield hovered near 4.2, and investors looked ahead to the next week's inflation data. This week, the moves were shaped by a few key factors. Economic data, job claims remain low and consumer sentiment improved, showing resilience in the U.S. economy. Federal Reserve outlook. Several Fed officials signaled that future rate cuts could come in if inflation continues to cool, helping stabilize bond yields. The geopolitical backdrop continues to be interesting. Rising tensions in Eastern Europe and Middle East keeps market cautious, though energy prices remain contained. Corporate earnings season is here, ramping up, with early reports showing steady margins and continuous optimism for the quarter. As we move into the week of the 13th, here's what we should expect. Let's keep eye on opportunities. If inflation data shows continued moderation, that could reinforce the case for lower yields and support equities. Earnings from major banks could also offer positive surprises as loan growth and net interest margins stabilize. The technology sector remains a key driver of market momentum heading into the year end. What are the concerns here? Any upside surprise in the CPI consumer price index could renew inflation fears and push yields higher. Escalating political risks of energy shocks could reintroduce volatility. With equity valuations to stretch, short-term pullbacks remain possible as market digests earnings results. In summary, it was a constructive week for both stocks and bonds and investors, as investors balanced optimism with vigilance. The next few days will center on inflation and earnings data that could set the tone for the remainder of October. And that's it for the week. As a recap, visit MRAadvisory.com for additional updates and have a wonderful week. Thank you.